Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Good to see you, Tom. Happy Monday.
Yeah, happy Monday to you. Perfect timing. We got Spotify earnings tomorrow. We're talking that one. They just announced a new pricing structure. The stock's getting hit here a little bit. But what kind of data do you guys have at LikeFolio? It seems to be like the ship's been righted here in Spotify so far this year.
Yeah, I tell you what, the data doesn't look bad at all. I mean, when we look at just mentions overall of this company, it's up significantly, about 24% on a year-over-year basis. If you look at the short-term moving average, a little bit longer term, you're more around like 9 or 10% moving average, but still positive. Happiness has pulled back a little bit over the last year from 77% to 73%. But I do like this mentions chart. I mean, you can kind of see when they do their New Year release every time. You can see those spikes. But then we're getting an unusual spike in summer right now. And I think this is actually data coming in before this price hike. So I'm not exactly sure what it is, but it's definitely a bullish sign to have more people talking about Spotify. Even when you look at web traffic, which I know it's not, exactly correlated to usage, but if you're signing up on Spotify, then you're going to be going to the website. That's up 12% year over year. So overall, we're seeing very positive trends in this company. And I will tell you that it's unusual for me, at least. My gut reaction is if you're raising prices, you suspect that the consumer is going to be able to take that and you're not going to have a lot of attrition. I don't really understand why the stock's selling off 5% today. I'm looking forward to hearing your guys' thoughts on that. But for me personally, I'll tell you a little anecdote. I recently had a credit card, hacked or whatever, and a lot of fraudulent charges. So I had to get a new card. And of all the things that I lost, one of the first things I made sure I put a new card in for was Spotify, because I didn't want to lose that. I let a lot of the other ones just kind of go and save some money each month. But Spotify was one of the first that I made sure I had a good credit card on file for. And $1 really just doesn't seem like a lot. So I don't know. I feel like this is a bit of my gut tells me this is the wrong reaction from the street, and this is a good opportunity for anyone who was maybe leaning bullish, which we were sort of neutral / leaning bullish going into this earnings report. But now with a 5% sell-off, I think it makes it just a little bit more attractive.
Landon, I agree. I don't understand why a stock would sell off when you're raising the prices. Here's the quote from the CEO about a week ago on this. He said, "We offer an amazing value to price ratio, and it has increased over the last few years. Bodes well if and when we raise prices." That was a week ago. Now they've raised prices. I don't think they're going to, I don't know for sure. I have no idea. But with all the things they're doing, raising prices, renegotiating some of the royalties that they're paying, plus adding more different ways, giving advertisers like a first, what pops up and music to pop up on your screen, they'll pay for that. So they're finding ways to raise revenue. And like you, Landon, I'm addicted to Spotify. It has completely replaced every kind of music that I have in my world. So I think they're onto something here. Adding podcasts, adding books just makes them better. But yeah, I see your point. I don't know why the stock is selling off when they're raising prices. By definition, that's going to bring in more revenue.
Right, exactly. And we always talked about Spotify. You mentioned podcasts. They're the leader in podcasts, and we've seen a huge uptick in podcasts over the last few years. And they just competed well in the music category. They dominated podcasting, but they competed well in music. But now I think they're really starting to turn it up in the music category. So they still have podcast domination, but now they're getting that music category where they're really starting to get into the dominant phase of things as well with their AI that's got that sort of a mix that they create each year for you, and their ability to create, I think it's like a automated DJ or something like that. I've got some friends that use it that are addicted to it, but everyone just is amazed at how well they can predict which songs you're going to like based on the other ones that you like. So I really think it's a very strong technology. They've got a user base that's in love, and $1 just doesn't seem like it's going to push people away. I mean, if you're paying $9.99 and now you're supposed to pay $10.99, are you really going to cancel your service? I think they're just going to get a 8 to 10% boost in revenue because And it's just, I don't know. I just don't see it. Maybe Tom could fill us in on why the stock is selling off 5%. Do you have any idea? Are we just on the wrong side of things here, guys?
Well, I think it's more of a concern because this is a premium subscriber base anyway, right? So there's concerns about subscriber numbers on that. It's not the ad supported one. They've got over 200 million on the premium services. So I think the run up that we've had already and potentially seeing a pullback. I mean, we saw this early on with Netflix when they raised prices, subscribers got hurt. Now, they all came back and figured that out. But I think that's the concern here for Spotify is the fact that it's a part of their base, just over 200 million subscribers. But what kind of attrition are they going to see due to the dollar? I mean, it's a dollar, right? But that could cause some people to cancel or maybe slip back down to the ad tier level of their subscriber offer at this point. So maybe that's the concern here. But Landon, when you look at this going into earnings, the over 100% run up that we've seen so far this year, what kind of earnings score are you giving this one?
Sure. We also keep in mind the recent pullback, right? We saw that with Netflix. Like we were bearish going into Netflix and it ran up huge, and that just made us like it even more. We're up plus 17 on Spotify. Now that score was calculated on Friday. We always put our earnings sheet out on Sunday, so it's calculated on Friday. With this move today, I think it might get up a little into that bullish range. 20 is sort of always the cutoff. So I think you could talk yourself into a trade on this one on the bullish side just because of this sell-off. And we've seen it in the past. The last report in April was a kind of a pop and drop. Didn't really go anywhere over the week. But the one in January was a pop and run, and it went up about 20% for that week. So this stock has the move in. I think it's a 9% expected move. It's down 5% today. So it's making a lot of that move already. And if the CEO can put rosy glasses or rosy report on this increase, I think, you might see some good numbers out of them. I wouldn't be surprised if they upticked a little bit here. So officially we're plus 17, which would be a neutral, almost bullish play. But given the fact that it's sold off a little bit, I'd be willing to take a bet.
Yeah, the company expecting 530 monthly active users overall, and that's including the 200 million plus premium subscribers. All right, Landon, great data as always. Have a great day.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at LikeFolio, breaking that down for us. Kevin, he mentioned it. It's a pullback. This stock has not traded below its 50-day moving average all year. It's getting close.
Yeah. Now, this is another one of those. And guys, follow me to the Thinkorswim chart here. You can see the 1-year chart. Right? Looks pretty impressive, and there's a sell-off. It's breaking back towards the 50-day moving average. But expand this out to a 3-year, and it looks a lot different, Tom. It tells a different story.